Good day, ladies and gentlemen. I welcome you to this very interesting session with Africa the Big Deal. It's such a privilege to be here with the Africa the Big Deal team, and we are here to basically speak to you about startup funding in Africa. And you're welcome to our Q3 2023 quarterly roundup. And I would love to see where everyone is joining in from. Good morning, good afternoon, good evening, wherever you're joining us from, in every part of the world. You're welcome, Shehu Steve. I can see you. You're welcome. It's a pleasure to have you here, and it's quite incredible. So let's wait for more persons to join in the room, and you can make sure to share the link. Make sure to share the invitation. Let everyone know what's going on. I see Matthew coming from Kenya. I see Hunduta from Kenya. Please just put your name and tell us where you're joining in from. I see Blessing from Rwanda. Incredible. We've had quite a very great turnout, and so pretty excited to have you. Yes, we have Geoffrey from Tanzania. You're very, very welcome. Thank you so much. So please keep the comments coming. We're going to have a very interesting conversation. We have our amazing hosts here. And so, yes, I see someone from Cape Town, Dileke from Lagos, David from Ghana, Ola Soliman from Egypt. You're very, very welcome. I want to use this opportunity to welcome you once again. My name is Rosemond Phil-Othihiwa, and I'm a corporate attorney. And it's an honor to be your moderator for this incredible session. As you all know, Africa the Big Deal is one of the largest repositories for startup funding database as far as we're concerned. And we have the amazing Maxime Bayen and Cuvellier Giacomelli, who is going to be making the presentation for us. So in next 30 seconds, right, let's have more comments. I will be picking them as they come in. There's so much. I see, Hey, Tham from Yemen. I see Lauren from Mauritius. I see Vuiza from Cape Town. I see Cookie from Botswana. You're welcome. You're very, very welcome. Very, very welcome. I see Ayola from Nigeria. I see Glorious from Kenya. I see Abel from Addis Ababa. I see Hans from Austria. So we have quite a very large audience. So I just want to thank you for being here. I'm going to be adding Max right now and to take over from here. So it's good to have you here, Max. Incredible to have you. Thank you for this brilliant opportunity. We've waited so long for this, so I'm so excited that this is happening. So
yeah, thank you very much, Rosemond. So yeah, my name is Max Cuvellier Giacomelli. I'm very happy to be with you all this morning. I'll be honest, I was slightly worried about the tech, but it's been working so far, I think. So fingers crossed it will continue this way. And thank you so much, Rosemond, for your help in setting this up. So I see it's 2 minutes past, so I will probably start while we have people joining us. I think we already have somewhere like around 150 people, which is amazing. Hi, everyone. So first of all, a brief introduction for those of you who don't know what Africa the Big Deal is. So Africa the Big Deal is really two things. It's a database of startup funding deals covering the past 5 years, so since 2019. It's 2,800 deals at the moment for a total value of, I think, around $16 billion. It's equity deals, debt, grants, exits, anything over $100,000. It's in Excel, so no frills. So you can run your own analysis based on your specific needs, whether you're a VC building your portfolio or an entrepreneur preparing for your next raise, or whether you're just curious like me. And then on top of the database, there's a free newsletter, which has been published almost every week for the past 2.5 years now. And basically what we do is turning this data into insights, trying to digest it a little bit for you. It's always short, with a bit of analysis and a graph that can be reused in different places. So basically think of today's presentation as one of our regular newsletter posts, but on steroids. So that's about Africa, the Big Deal, and I suggest we dive straight in. So how was Q3 2023? So Q3, July, August, September. So here on this slide, we're looking at all the transactions. So that's equity in the block color, that's debt and grants above, and then at the top, the exits. And as you can see, unfortunately, no matter how you look at it, Q3 wasn't a really good quarter. In absolute numbers, $500 million is obviously a lot of money. But to find such a low total quarterly transaction value, you need to go back all the way to Q4 2020, nearly 3 years ago, pre-funding boom, if I can say. And what's a little bit concerning is there's been a 50% drop quarter on quarter and year on year in terms of total quarterly transaction value. In other words, this quarter, startups raised in Africa half of the amount that they had raised last quarter and half of the amount that they had raised a year ago. So we've been, unfortunately, we've been used in the past few quarters to quarter on quarter and year on year drops, given the current context, but nothing of that magnitude really. So if we look at what it means for this year so far, basically there's been about $2.3 billion of equity and debt transactions done by startups in Africa. That's $1.4 billion in equity and $900 million in debt. What is not shown here on this slide, because it skews the number quite a bit otherwise, are the two large exits, if I must say, that happened since the beginning of the year. Obviously, InstaDeep at the very beginning of the year, nearly $500 million in Q1, depending on how you look at the numbers, what's realized or what might be realized in the future, and Expensia in Q2 for $100 million. Actually, that's interesting to note as well that in Q3, there weren't any notable exits announced on the continent. So $2.3 billion of equity plus debt is, as you can see on the slide, roughly half the total that was raised last year, and is a little under half the total that was raised in 2021. There's a theme here of like a 50% decrease, not only a 50% quarter on quarter and year on year decrease, but also if you compare the year to date to last year, we're at about 50% of the numbers. Now, if we look at equity specifically on this slide, and by the way, we're showing these two views because I think they tell overall the same story, but we also have an ongoing debate with Maxime, and a healthy one, of course, of whether to include debt or not in the analysis. On my side, I tend to argue that startups are now communicating a lot more on debt in a bear market, if I can say. So it's kind of skewing the numbers up. But Maxime's counter argument, which is a very fair point, is that past announcements might not always have differentiated between equity and debt. So it's hard to kind of adjust, but the trends are actually quite similar. So in this case, if I can say equity-only story, it's actually very similar to the all transaction story that I was telling earlier. So with just over $300 million, $324 million, according to our numbers of equity raised, Q3 was there's no other way to put it. It was the worst quarter since late 2020 for the past 3 years. You can also see that, and that's the gray line, that the number of equity deals over $1 million, and there were 42 of them announced in Q3, is still very low compared to previous period, though it is slightly higher than what it was in Q2. Actually, if you look at Q3, it's almost exactly a third of what it was at the height of the heat wave, if I can say, in Q1 last year, where there were 125 deals over $1 million announced on the continent. Now, if we look at, again, same view as earlier, but only for equity, if we look at 2023 so far, it is even grimmer than that all transactions view that we had before. So $1.4 billion has been raised in equity between Q1 and Q3 this year. That's only about 35%, just over a third of what was raised in 2022. And it's not even what was raised in Q1 last year. In the interest of time, and also because it's not a pretty slide, I will pass quickly on this slide. But I wanted to note that you shouldn't worry. We'll be sharing all the slides in the coming days, maybe not today, but very soon, in a format that you can reuse in your own presentation if it makes sense. I should probably have said that at the beginning to save you from trying to take blurry screenshots of the slide. They'll be available. We'll share them here on LinkedIn, and obviously with anyone who's a subscriber to the newsletter. So now, what are the deals behind these numbers? Because obviously it's interesting to look at aggregate numbers, but it's more interesting to see the stories behind it and what make those numbers. So I see some of you, it's on the side here, very active on the chat, which is great. So don't hesitate to post there what's been your, according to you, the most notable deal of Q3 or even of 2023, your favorite deal, if I can say, as a whole. And I'd be very curious to know when I get a chance to look at those comments after the live. So what we're doing here is that basically we're going to show you the 5 largest deals. So here equity plus debt that happened in Q3 2023. You'll see Spyro in Benin, Witility in South Africa, Move in Nigeria, Nuro in DRC, and Lemfi in Nigeria. And here I encourage you to obviously read about those deals, but also have a look at a macro level, and you'll see in the coming minutes that this top 5 is actually quite representative of the macro trends that we're about to discuss. Look at the location, Nigeria and South Africa, but also Benin and DRC. Look at the sectors, fintech, energy, logistics, and transportation. And if you look at the CEOs and the founding team, there is not a woman in sight here. It doesn't take any of the merit away from the male entrepreneurs on this slide, but it is a quite dire reality for female founders and CEOs, and we'll come back to that in a few minutes. And if you look at the amounts as well, maybe I should have started with that actually, you'll also see that there wasn't a single, what's sometimes called mega deal, so a deal over $100 million in Q3. And it's actually probably one of the main reasons why the numbers this quarter are low compared to other periods where there was always at least a deal over $100 million. I think last year in Q2, there were 15 over the year. So on average, more than one a month. Okay, let me hand over to Maxime now, who will dig deeper into the geography side of things and the sector side of things before I come back with the gender analysis. So over to you, Maxime.
Thanks a lot, Max. Great to be with you all today and to share a little bit more about the stats in this new format. So it's really exciting. I'll jump straight in as well. We look now at this geographical split. What's interesting in this quarter is actually that with 71%, the share of equity funding that went to startups across the big 4, so Nigeria, South Africa, Kenya, and Egypt, is actually close to its historical low. Usually the ratio is closer to 85% plus. So that's an interesting point, and we'll come back to it in a minute. Also, what's interesting is that if you look back at the first and second quarter of the year, you can see that the leading market among these big 4 keeps changing. From Egypt in the first quarter to Kenya in the second one, and now to Nigeria again. So yes, that's also quite unique so far. I think we can look at the next slide, Max. If we look at cumulatively over the first 9 months here, and also linked to the fact that the leading market among those 4 has been changing quite a bit. Actually, the amount of funding that these 4 markets have raised in the past 9 months is actually fairly similar. So about $300 million each, and that's also the same amount for the rest of the continent altogether. So yeah, that's a good way to have order of magnitudes in mind is about 300 million for each of the big 4 and 300 million for the rest of the continent in terms of equity funding so far. Again, if we it's interesting to see how things have changed from 2022 to 2023. Clearly there was a significant drop, as Max mentioned, but in some countries was felt a little bit more than others. If you look at Nigeria, dropped from over $1 billion to just under around 300 million. Same for Kenya as well. Egypt seems to have resisted a little bit better, but we'll come back to the reason on this a little bit later in the slide. We'll actually start looking at Nigeria, so that's next slide. And in the last quarter, Nigeria had raised about 30% of the total amount of equity funding. and that was also around the same ratio in second quarter. And that basically Nigeria regaining its leadership from the first quarter and actually fourth quarter last year where they lost it. If we look at the details behind this data, it's actually driven by a couple of large deals. Nomba, which was Kudi before, Sabi, LML's Move, and Lemfi, which we saw in the previous slide as well. So again, there's a disproportionate effect, of course, of large deals on some of these numbers. If we move south now and look at South Africa, there was clearly a promising first half of the year, but then South Africa falls back behind in terms of equity funding in the third quarter. And actually just one startup in the third quarter has raised around an equity round above $10 million. That's Stitch. And that's really the only one. So again, the fact that we have less large deals has a disproportionate impact on the total amount of funding. If we move to Kenya, it's clearly been a slower so far. It does. I mean, the ecosystem keeps its second spot thanks to a couple of large deals towards the second half of the year, with Maidawa and Victoria Farms raising significant deals, significant amount of funding. But still, as we discussed before, there was a significant drop for the Kenyan ecosystem from over $1 billion raised last year to just around $300 million in these first 9 months so far. So if things go the same way, at best it would be half of the amount raised last year for the total amount of 2023. Now going to Egypt is an interesting case. Overall, if we look at the cumulative number, the Egyptian ecosystem resisted a little bit better. It was just north of 500 million last year, and now it's around 300 million. So the drop is not as significant as in other markets. However, this is mainly skewed by one large deal in the first quarter. That's MNT Alan with 250 million. And actually, if you remove that, the story is clearly not as good, with second and third quarter being particularly complicated for the ecosystem in Egypt, with less than $20 million cumulative funding for this last 6 months. So it's been a challenging couple of months. Of course, again here it's important to keep in mind that the large deals are what is skewing these numbers massively. We're still seeing quite a significant amount of pre-seed deals and seed deals in these markets, but the lack of very large deals is what makes things a little bit more complicated. All right. Now, if we move to basically the rest of the geography, the good news is that despite this complicated environment, you had almost $100 million of equity funding that was raised by startups outside the Big Four in this quarter, and that's as I said earlier, this ratio is quite a historical high for the rest of the continent. Again, if we zoom in into what's behind that, most of the funding went to 3 markets: DRC with a deal from Nuru, the energy space, Rwanda with Kasha, and then the fintech Lupia in Zambia. But it's still a good trend, and hopefully we'll see this ratio growing in favor of the rest of the continent for sort of more distributed funding across the different countries in the continent. If we move to the sectors now, what's not surprising is that fintech is still the leading one. What's a little bit more surprising is that this ratio keeps going down, with now just about 30% of the total equity funding that were raised by startups in the fintech space in the last quarter, and it's actually the lowest ratio we have seen so far. If we look at other sectors, we, as Max mentioned earlier, energy, logistics are still high. What's interesting, we have not mapped it as a sector per se here, because it's a little bit more transverse. But it's the fact that if you actually group what we could put under overall climate tech sectors or environment tech sectors, so energy, agri and food, and waste. This is close to actually also 30% of the total amount of equity funding. So you basically have the sort of the climate tech sector now equaling the fintech sector in terms of total amount of funding, and that's an interesting note. It's been growing. We have had a couple of posts on this in the past couple of months, and definitely something we'll continue to monitor carefully. Yes, and I think that's it on the sectors. I haven't had a chance to look at all the comments, but I guess we'll go back to some of this a bit later. Yes, what was interesting really, as we say, is the ratio of fintech going down. What's important to keep in mind here is that fintech is now also becoming a sort of a transverse sector, and a number of fintech-enabled startups we're seeing is quite important. So sometimes not necessarily labeled as a pure play fintech player, but it could be an agri tech startup, for instance, that actually has a buy now pay later component, and could also be seen as a fintech to some extent. So that's something to keep in mind. And back over to you, Max, for another interesting lens here.
Thank you very much, Maxime, and apology if I didn't change the slide at the right time. I had a little bit of a tech scare. My mic stopped working, but I think we're back here, so hopefully you can all hear me. So I'm going to take a few minutes now to look at trends from a gender perspective. And before I start, and I've done that in the past, I'd like you to try and think of a female CEO or a female co-founder in Africa that you find particularly impressive, or maybe even one that you think is underfunded at the moment. Do you have any name that come to mind? And if you want to post this name in the chat, if you would like others to see, why not? So if you read the newsletter, you will know that this is a very important topic for us. Sometimes it's something I've written multiple times about since 2021, and it's also become a more and more researched and talked about topic overall, which is great. When I started doing the analysis last week, I'll be honest, I was dreading it because I had this expectation that the current slowdown in funding that we've seen for quite a few quarters now was going to affect women-led ventures disproportionately. And it's actually, as you can see on this slide, at least for female CEOs, the opposite that we're seeing, at least so far. The percentage of funding, of equity funding that's raised by female CEOs is at its second highest since 2019. So we've been tracking these numbers. The only exception, and I think it's worth mentioning it, is Q1 2021, when in January, Grow Intelligence and their CEO, Sarah Menker, announced a funding round of $85 million, which remains to this day the highest amount that was ever raised by a female startup CEO in Africa. So not only is this percentage high for Q3 2023, but it's been growing, as you can see on the slide, steadily since Q4 last year. I'm really hoping that we're going to see this trend continue when we talk in a quarter. The absolute number itself behind these 19% remains quite low. We're talking $61 million in this quarter, but the trend is definitely encouraging. If you remember the slide presented earlier about the largest 5 deals, which all had a male CEO and an all-male founding team, actually, if you go a little bit lower on the table to the 6th and the 7th largest deal in Q3 2023, that's where you find female-led startups. In July, and they're worth mentioning, and Maxime already mentioned at least one of them, In July, Kasha, with her CEO Joanna Bischel, raised $21 million Series B to expand their health access platform based in Rwanda. And also in July, Maidawa, this time in Kenya, led by Priscilla Muyu, announced a $20 million in funding, also to expand their health access platform. So we're seeing these type of stories coming, and it's actually very important, but most importantly, a testament to the work that they and their team are doing. Now, if we look at how things have been going since January in absolute numbers, we can clearly see that the gap remains very high between the equity funding raised by male CEOs and that raised by their female counterparts. So far in 2023, female CEOs have raised about 11% of the total equity funding raised on the continent. So that's $154 million versus $1.2 billion raised by male CEOs. In other words, and I like to look at this ratio basically, for every dollar raised by a female CEO this year, male CEOs raised nearly $8. And that might seem like a very big gap, but nothing compared to what it was last year, for instance. In 2022, for every equity dollar female CEO raised in Africa, male CEOs had raised $29. So that's a ratio of 1 to 29. This year, the ratio is 1 to 8, which is much better. Not where it should be, but much better. Now, I'd like us to take a minute to also look at funding raised based on the gender mix of the founding team. And there's obviously a correlation between this view and the gender of the CEO view, the reason being that in almost all the cases, the CEO is one of the co-founders, which means that if you have an all-male founding team, you will almost always have a female CEO, except in a few cases, and actually Maidawa in Kenya, which I just mentioned, is one of those exceptions. So here we see that the majority of the funding continues to go to either single male founders or male-only founding teams, but the proportion at 73% in Q3 is on the lower side if you compare to the past overall. So startups with either, however, a single female founder or a female-only founding team continue to attract, a ridiculously small share of the equity funding. And if you look over time, that share actually never went over 4% in the past 5 years. Unsurprisingly, if we look at 2023 overall, the numbers show that 77% of the equity funding this year so far has been going to founding teams with no women inside. It is lower than the percentage in 2022 when it was 83%, or in 2021 when it was 81%, but it remains extremely high. And as I said on the previous slide, the share of funding raised by startups without at least a male founder, so that yellow slithers that you see at the top of the bar, remain ridiculously low. So one last slide, quickly before I hand over to Maxime to conclude. This is the number of equity deals over $1 million by gender of the founder or the founders. And maybe there's a little bit of a silver lining here. I'm always looking for one. The proportion is slightly higher. 30% of the deals in 2023 so far, the 1 million plus deal, went to to founding teams with at least a woman. And if you compare, if you remember the numbers from the previous slide, in terms of funding, that was only 23%. So at the same time, though, it shows a reality is that when gender diverse or female founded ventures raise, they tend to raise less on average than their male founded counterparts. Okay, I'm going to hand over back to you, Maxime, for you to conclude with a little bit of a crystal ball moment.
Yeah, thanks a lot, Max. Yeah, a bit of a crystal ball moment. And actually, I would like to start by a question for everybody in the chat and on the live right now is, what do you think? What's your bet on what the total amount of funding for the entire year 2023? I know we have just one quarter left to go, but I'd be keen to hear what you guys think. If we actually take a look at the equity and the pure equity funding at the moment, We did a couple of projections, more like pessimistic and more optimistic. And again, here I'm mentioning it that we're just looking at equity funding. It's fairly unlikely that it will reach more than $2 billion of total equity funding, which would be around half of the 2022 number. So fairly significant drop. However, as Max said earlier, we're always torn when it comes to whether we should count debt or not in these numbers. So we actually decided to show both views. And if we look at the same statistics now, including debt, the total amount of funding could reach, for the full year 2023, could reach around $3 billion, which is still about 1.5 billion short compared to 2022. But the drop is not as big. It's about 40% drop compared to the same stats if we only look at equity funding. So yes, it's going to be overall a fairly complicated year in terms of if we look purely at the number of dollars invested in startups in Africa. Another way to look at it is also the fact that 2022 and to a large extent 2021 were particularly particular outliers in a lot of extent in terms of startup funding. It's also interesting, and that's why we've put it like that. It's also interesting to look at where things were in 2020, and here the total amount of funding has actually tripled, or is likely to triple compared to 2020. We haven't done the analysis yet because all the data isn't necessarily out across other regions. So when we look at, for instance, at other regions, total amount of funding, and we compare it with 2020, Africa has actually been resisting a lot better than other regions because most of the other regions in the VC funding have dropped below the 2020 level, while here we still had a significant increase. Hopefully, we'll be able to share more on this in the coming weeks when we have all the data. And I also hope that we'll beat the $3 billion mark. But yes, it would take a miracle for the 2022 range of funding to be reached this year. I think we're reaching the end of the chat. We had said about half an hour. We're at 32 minutes, so it's not too bad in terms of timing. I would like to thank really everyone for joining. Please share feedback with us. It's the first time we do this format, so very keen to hear what you all think about it and whether we should keep doing it. If you want more insights, more data, as Max shared earlier in the presentation, you can access all of this. So the newsletter is the first one that you can receive on a regular basis, and we'll continue to post that. And all the data, I've seen a lot of questions on whether we have data on Morocco specifically, on Tanzania specifically, and so on. You can actually find all the details, the detailed data behind this analysis in our database. The link is there, and we have all the details on a deal per deal basis for startups and investors as well. And I think now we have close to around 100,000 data points in the database. You can access it all. It's raw data in Excel. You can play with it, make it your own, do your own graphs, and do even cooler graphs than Max. Good luck on that because he's getting quite good at it. But I think that's all. Do follow us on LinkedIn, and if you have any questions, we'll try to answer to these in the comments as well. I don't think we have left a lot of time for Q&A, but we'll try to answer questions on LinkedIn on the comments if you have some.
And I'm sure that's feedback that we're going to receive for next time. Maybe build a little bit of time for Q&A. But as we mentioned earlier, this will live on. The presentation will be on LinkedIn Live, so you can go back to it, watch it again or share it. The comments will stay on as well, so we'll look at them in the coming days to try and reply to specific ones. And yeah, thank you very much, everyone, for joining us. And I guess that's the end. And thanks again, Rosemond, for making it possible.
Such a pleasure. It was fantastic being here. Well done to the team, and we celebrate the great work you're doing for the continent. Thank you very much.
Thanks,
Have a
everyone.
very good time.
Bye.
Bye.